Chapter 4-4A. We're going to be taking a look at Diane Bernick and her consulting firm that she has opened. So be sure to refer to 4A in the back of your book so you can see the chart of accounts and you can see the transactions that we're looking at for January. And what we're doing now is we're journalizing these transactions instead of putting them into T accounts. So the theories are the same as far as at least one debit and one credit, and then all debits must equal credits. All total debits must equal total credits. So we're journalizing. Hopefully if you watch some of the other examples that had some pointers, and then we'll go back and we'll post. So on January 1st, she invested cash in the business of $12,000. So you've already learned that that means I'm going to increase cash, I'm going to increase capital. But now that we're journalizing, we have to write our date, and then our debits are always listed first, so we write in cash, and then we put in $12,000 in the debit because that's the amount that she invested. Then for our credits always go second. We indent a little bit, we put the name of the account, and we use the correct name based on the chart of accounts, and we write Diane Bernick, comma capital, $12,000 credit. So for this one transaction on January 1st, total debits equal total credits, and then we put an explanation on what happened. This was the owner's original investment. On the second, it said she paid office rent. So when I'm going to pay office rent, I don't have to write the January anymore. I just write the second because we're in the same month. Debit rent expense, so I write it first. All my debits go first for $750, and I'll credit cash for $750. Notice the indent and the formatting here. And my explanation is I paid office rent for January. Now the post reference, don't worry about those yet. Right now we're just going to be concentrating on the journal entries. On the third, put the 3 in here. Purchased office equipment on account. I purchased office equipment, so I've increased my office equipment. Office equipment is an asset and increases with a debit, so I'm going to debit office equipment for $1,300. How did I pay for it? Well, it says on account, so I'm not paying cash, so nothing will happen to the cash account here, so I'll credit my accounts payable for $1,300. On the 5th, received cash for services rendered. Anytime you receive cash, you're going to increase your cash. Cash increases with a debit for $950, and I credit my consulting fees. The other thing that I didn't mention is this is kind of like the T account. Here's your line, and here's your line down. Debits on the left, credits on the right. So maybe that will help you. So again, the consulting fees is an increase, and it's a credit of $950. Okay, so we'll scroll up a little bit. On the 8th, I paid my telephone bill, so I debit telephone expense for $85. I paid it with cash, so I credit cash for $85. And on the 10th, I paid for a magazine subscription, and in parentheses it says to use miscellaneous expense account for $20. So expenses are always going to be increased with a debit, so I debit miscellaneous expense for $20, and I used cash to buy it, so I'm crediting and decreasing my cash for $20. On the 11th, purchased office supplies on account. I'm increasing my office supplies with a debit for $250. On account means I'm going to use accounts payable. I will pay for it later. $250. Accounts payable increases with a credit. Then on the 15th, it says I made a payment on account from the January 3rd transaction. And if you remember back on January 3rd, we purchased office equipment on account for $1,300. So I'm not buying office equipment now. I'm just paying $200 of what I bought back on the 3rd. So I'm going to debit or decrease my accounts payable for $200 because if I'm making them a payment, I'm not going to owe them that $200 anymore, so that account should be decreased. And since I'm spending cash to pay them, I'm also going to decrease my cash account. On the 18th, it said I paid my part-time employee $600, so debit wages expense for the $600, decrease credit cash for $600 because I'm paying them. 21st, received cash for services rendered, so I increased my cash because I received it, and then I credit my revenue account because it was for services rendered for the $800. Then I paid my utility bill, so I debit utilities expense for $105 and credit cash because I paid cash for $105. Then the owner withdrew some money, so we always debit the owner's drawing account when they take out money and then credit cash because it's decreasing cash. Then I paid my part-time employee again, so debit wages expense and then credit to cash.